So what is the real reason that BlackRock, ETFs, investors, banks, and Wall Street are going around and buying up whole subdivisions? And the reason is not the obvious one that people are being given. All the stuff on social media, all the stuff on the news about how they want to rent these single-family homes to everybody, that's just not the case. One of the biggest correlations that people have missed is the asset bubble and accounting manipulation that's going into buying these subdivisions correlates with the reverse repo market, where a lot of these entities are under collateralized. They have a lot of money, but they don't have the collateral to offset it. So when you see the reverse repo market where companies are trying to buy collateral and dump cash, that fits into this real estate buying spree, because these entities know that shortly somewhere around half of renters will not be able to rent because they'll have no credit. They'll have no positive rent history. With the eviction and job loss and the fact that people are getting $15 an hour jobs, what kind of place are you going to rent on $15 an hour? Will you be creditworthy to rent? These are all obvious questions that are never covered on social media or on these business shows. The real reason that these investment entities, banks, and institutions are buying whole subdivisions and single-family homes is the simple fact of accounting law. Back during the last major crisis in 2007, 8, 9, and 10, there were changes in how assets are evaluated on the books of banks, ETFs, brokerages, and investment houses. And what they did is they allowed these entities to no longer calculate the value of these assets and collateral based on fair market value. What they did is they allowed them to evaluate these assets for the loan value, the purchase value, or the inflated value before the market crashed on these assets. And in this way, a lot of institutions and banks that were actually insolvent due to inflated collateral values by this new evaluation system appeared to be solvent when they really weren't. So what these companies are all doing is they're going into the market now, and in our area, a lot of properties stay on the market between 2 days and 2 weeks and they're gone, whether it's land, whether it's single-family homes. And a lot of the land is being bought up and made into subdivisions in our area. So what they're doing is they're stuffing their collateral and they're inflating the collateral on their balance sheets by doing this. And they know that any rents they get will be short term. And in the long term, a lot of these properties won't be rentable. Because if you think about it, once rents get above $1,500 a month, which renting these single-family homes, if they're buying $300,000, $500,000, and $700,000 homes, which they are in certain parts of the country, the rent on these homes would be around $2,500 a month. There's no way you're going to rent a $2,500 home on $15 an hour. So they know that there is no market to really rent these properties. So this is just an accounting scam they're using to cook the books and show they're solvent. Because as we go deeper into this hyperinflationary asset base that we have, these bubbles will expand till they collapse. And once they collapse, in that $700,000 home that they bought is now worth $200,000, they're going to still show it at the purchase price on their asset balance sheet, even though it's not worth the $700,000 anymore. So this is just another accounting scam. This way they can buy available assets and they don't have to inflate gold, silver, copper, and other commodities. So what they're doing is they're trying to offload their collateral obligations into real estate, evaluated at purchase price rather than actual value. This is another reason they're willing to pay $50,000 or $200,000 above asking price. They want an inflated asset value. So this is what's really happening. So what this forecast is a hyperinflationary environment in the future. They just don't want to come out and tell you this. So please share your thoughts, comment, rate, subscribe. We'll see you on the next video.